Hey guys, welcome back to DivyFX. If you've ever entered a trade and got stopped out before price moved in your direction, this video is for you. So today I'm going to break down one of the most important concepts in trading, and that is called the supply and demand zone, or the demand and supply zone. And don't worry, I'm not going to overcomplicate it. I'll explain it simply and also show you live chart examples so you understand how to actually use it. You know, a lot of traders focus too much on entries, but the real question is, where are you entering from? Because even a good setup can fail if you are entering at the wrong location. Now that's why understanding supply and demand can completely change how you see the market. A demand zone is an area where buyers stepped in strongly before. So when price comes back there, there's a chance buyers might step back in. Now let me give you a visual example of that. Mind you that a demand zone is what? An area where buyers stepped in, and this is a bullish move. Sorry, this is a bullish move, right? Now this is a zone, or the point where buyers stepped in and they made this big move. So it is expected that when price moves back to this very point, the buyers might still do what? Rise up again. So this zone where the buyers stepped in, moved up here, came down again, and then moved up here, another one, is called your demand zone. Your demand zone, because price is going to gain more momentum to the bullish side. Now that is basically to explain what a demand zone is. Now let's talk about a supply zone. A supply zone is the opposite of this very thing I just explained. Now it's an area where sellers were strong before. Now this is a bearish move, right? There were very strong sales, and then it stopped, and then market reacted back, okay, or kind of moved back up. Market moved back up like this, and then this something like this. When you have something like this, that is to show that the sellers were strong at this very point, and then when the market drove all the way down here and then came up, is to show that the market sellers probably might still continue to sell again from that very point, and that point is what you call your supply zone. So here is what you call your demand zone. Let me type it in. Here is called your demand zone. So here is called your demand zone, right? While this up here is called your supply zone. Now that's to explain what a demand zone and a supply zone simply is. Again, think of it like areas where the market previously made strong decisions. Okay, now let me show you what this actually looks like on the chart. Now look at this area I marked here. This very area right here indicates that there was a little bearish move from here, but the bearish move was very little, and then came this impulsive big bullish move up until here. Now that indicates that the buyers have more strength in this very place. Now look, now this thing market drove all the way down here to this very place that it took off from here. It came down to this very zone, and then it flew up again. Now this is to show you, or to say that this is a demand zone. Let me type it. That's this right here is a demand zone. Now, this right here is a demand zone. Why? Because we had this little bearish move and then an impulsive or a strong bullish move from this very zone, and then came down all the way. Price came down all the way to this very box again. That is this demand zone here, rather, and then spiked up again. That is why we call it a demand zone. Now let's talk about supply zones. A supply zone, on the other hand, is when we have an impulsive bearish move. That is something like this. We have the market buying up, but it was not very serious. Then came this down push. It was very forceful all the way down here. From where? From this very point, and then the market or the price rose back up until this very zone and then came down here. That shows that this is a supply zone. Now, why is this supply zone? Don't mind this very one I marked. I just used it as an example for you guys. This zone is what you call a supply zone. Now, why is it called a supply zone? Because market was buying initially from here, and then there came this impulsive bearish move, and then market returned, or the price returned to that very zone and then sold again nicely before this up move. Now that shows that this is a nice supply zone. So if you should take a trade from this very place, you should at least see something like 2 to 3 RR at least before this massive building up again. That is to talk about, or that is to explain what a supply zone is. Now, one mistake a lot of beginners make is marking too many zones. If every area looks like a zone to you, then you are probably forcing it, because less is more, and you want quality zones, not plenty drawings all over the places. Just find quality places that you have something like this, then you can mark it as a supply zone or as your demand zone. Now, this is where a lot of people rush. Just because the price has entered your zone does not mean you should enter immediately. You still need confirmation. For example, you need something like a rejection candle, a bullish or bearish engulfing candle, a break of structure on a lower time frame. Now that's what gives you a cleaner entry. So let's say price enters this demand zone right here we are looking at, right? I don't instantly buy, I wait. Now if buyers start to show strength, like if it start like move, okay, I'm like, okay, this is a confirmed trade that this is not going to be swiped out, that I'm going to have like clean bullish moves. Then I'm like, okay, I'm going to wait for what is called bullish engulfing. Now this is a bullish engulfing. Although this very video is not meant for confirmation trades, it's just to show us or to explain demand and supply zone basically. So I think on the next video I'm going to talk about confirmations and the rest of that. Now this same strategy applies to supply zone. When you get to supply zone, you don't just start selling immediately. You wait for confirmation, maybe a bearish engulfing, a rejection candle, or you wait, go to the lower time frame and see or check for break of structures there. So always remember this: good entries don't just come from timing, they come from your location as well. If you can learn how to identify strong supply and demand zones and combine that with patience, your trading becomes much more structured. So what I'm going to ask you to do right now is to go back to your chart, open maybe your gold, GBP/USD, Euro USD. I don't really like Euro USD anyways. Trade something like GBP/USD or stuff, other things. Now mark out structures like this, mark out supply zones, demand zone, where you have a consolidation like this. Consolidation, let me use my arrow tool. Consolidation like this right here, and then a massive impulsive move, and then retracement to that very zone again, and this is your demand zone. Don't know if that makes sense. Same thing applies to your supply zone: a bullish consolidation, a bearish impulsive move, retracement, and then mitigate, and then it sells. Now that's to explain supply and your demand zone. So if this video helped you, drop a like, subscribe, and share this video with your friends who might be interested in learning Forex basics. See you on the next one. This is DivyFX. Let's keep growing. Thank you.